Are you confused about what business structure to choose for your new venture? Well, understanding the key differences between the structures is crucial for making the best decision. This video will help you navigate the complexities of LLC versus S-Corp versus C-Corp to find the perfect fit for your entrepreneurial journey. And by the way, if you would like to get help in starting your own LLC, I would highly recommend you sign up with Northwest Registered Agents. They're professionals and they'll be able to help you out. You can get your LLC started for as little as $39. And for your convenience, I left my affiliate link down in the description of this video. And with that in mind, let's get started. Understanding the distinctions between LLCs, S-Corps, and C-Corps is essential for making an informed decision. These business structures are designed to meet different needs, goals, and tax situations. An LLC, or in other words, a limited liability company, combines the simplicity and flexibility of a partnership with the liability protection of a corporation. This makes it an attractive option for many small business owners. An S corporation, or C Corp, is a special type of corporation that allows income to pass through to its owners' personal tax returns, avoiding double taxation while still offering liability protection. A C corporation, or C Corp, is a standard corporation that is taxed separately from its owners. This structure is ideal for businesses looking to attract investors and achieve unlimited growth despite facing double taxation on profits and dividends. Formation and structure. Forming an LLC involves filing articles of organization with your state's business office. LLCs offer a flexible management structure where the business can be managed by its members, owners, or by appointed managers. The owners can be individuals, corporations, or other LLCs, and there's no limit on the number of members. Creating an S-Corp begins by forming a corporation and then electing S-Corp status with the IRS through Form 2553. This type of corporation is limited to 100 shareholders who must be US citizens or residents. S-Corps can only issue one class of stock, which can limit their flexibility compared to C-Corps. Now, to establish a C-Corp, you file articles of incorporation with the state. C-Corps can issue multiple classes of stock, which makes them appealing to investors. There's no limit on the number of shareholders, and they can be individuals, other corporations, or even foreign investors. Taxation. Taxation is one of the primary differences between these business structures. LLCs are subject to pass-through taxation. This means that the company's profits and losses are passed through to the owner's personal tax returns. The owners then pay taxes on their share of the profits at their individual tax rates. This can simplify tax filing, but also means that owners are responsible for paying self-employment taxes on their earnings. S-Corps also benefit from pass-through taxation, allowing income to be reported on the shareholders' personal tax returns. This avoids the double taxation faced by C-Corps. Shareholders of S-Corps only pay taxes on their salaries and any profits distributed to them, potentially reducing their overall tax burden. Additionally, S-Corp owners can save on self-employment taxes as only their salaries, not the entire business profit, are subject to these taxes. C-Corps are subject to double taxation. The corporation itself pays taxes on its profits at the federal corporate tax level, which is 21%. When the corporation distributes dividends to shareholders, those dividends are taxed again at the individual level. This double taxation is a significant consideration for businesses when choosing their structure. Liability protection. All three structures, LLC, S-Corp, and C-Corp, offer limited liability protection. This means that the owner's personal assets are generally protected from the business's debts and legal liabilities. However, to maintain this protection, it's crucial to adhere to the formalities and regulations required by each structure. Failing to do so can result in losing limited liability status, exposing personal assets to risk. Management and control. LLCs provide a great deal of flexibility in management. The owners, known as members, can choose to manage the LLCs themselves or appoint managers to run the business. This structure allows for a more hands-on approach for small business owners who want to be actively involved in their operations. C-Corps are required to have a board of directors and officers who manage the company. The owners or shareholders elect the board, which then appoints the officers. This separation can help distribute management responsibilities and ensure that the company follows formal governance procedures. C-Corps also have a structured management system, with a board of directors overseeing the company and officers managing daily operations. This structure is beneficial for larger companies with multiple levels of management. It ensures clear lines of authority and responsibility, which can be important for investors' confidence and regulatory compliance. Compliance and reporting requirements. The compliance and reporting requirements for each business structure vary significantly. LLCs have relatively simple compliance requirements compared to corporations. They are not required to hold annual meetings or keep formal minutes, although it's still advisable to maintain accurate records. The primary ongoing requirement is the filing of an annual report and paying any associate state fees. S-Corps have more rigorous compliance obligations. They must hold annual shareholder meetings, keep minutes of these meetings, and file regular government reports. The corporation must also adhere to specific rules regarding shareholder distributions and compensation to ensure compliance with IRS regulations. C-Corps face the most stringent compliance and reporting requirements. They are required to hold regular board meetings, keep detailed minutes, file annual reports, and submit various financial disclosures. These requirements can increase the administrative burden and costs associated with running a C-Corp. Profit distribution. Profit distribution is another area where these business structures differ. LLCs offer flexibility in how profits are distributed among members. The operating agreement, which is the document that outlines the business's financial and functional decisions, can specify how profits are shared. This flexibility allows members to tailor profit distribution to meet their specific needs and contributions. S-Corps must distribute profits to shareholders based on their ownership percentage. This means that each shareholder receives a portion of the profits proportional to their share in the company. This uniform distribution can simplify accounting but also limits flexibility. C-Corps distribute profits to shareholders in the form of dividends. These dividends are paid out of the corporation's after-tax profits and are subject to double taxation. However, C-Corps have the flexibility to reinvest profits back into the business, which can support growth and expansion. Cost considerations. The costs associated with forming and maintaining these business structures can vary significantly. Forming an LLC is generally less expensive and involves fewer ongoing costs compared to corporations. The primary expenses include state filing fees for the articles of organization and any annual report fees. LLCs also tend to have lower administrative costs due to their simpler compliance requirements. Now, S-Corps, while still less complex than C-Corps, involve higher administrative costs. These costs stem from the need to comply with stricter reporting and governance requirements. Legal and accounting fees can also add to the overall cost of maintaining an S-Corporation. C-Corps are the most expensive to form and maintain. The costs include filing fees, legal fees for drafting complex documents like articles of incorporation and bylaws, and ongoing compliance costs. These expenses can add up quickly, especially for larger companies with extensive regulatory and reporting obligations. So, choosing the right business structure, whether it's an LLC, an S-Corp, or a C-Corp, depends on your specific needs and goals. LLCs offer simplicity and flexibility, making them ideal for small businesses. S-Corps provide tax benefits and liability protection, perfect for those avoiding double taxation. C-Corps are best for businesses aiming for high growth and investor appeal. Each structure has its own advantages and challenges. Consulting a tax professional or business attorney can help you make the most informed decision for your company's future. And if you would like to get help in starting your own LLC, then make sure to use my affiliate link down in the description of this video and sign up with Northwest Registered Agents. They're professionals and they'll be able to help you out. Clicking on my link doesn't cost you anything extra and it helps me support the channel. I hope this video was helpful and thank you so much for watching.